Now let us look at the next question. For issuing a duplicate demand draft, the purchaser is required to submit what? Why a duplicate demand draft in the first place has to be issued? The demand draft is an instrument, it is a dying instrument. In those days there was a lot of demand draft. Demand draft is when you want to remit money to government department or to some big corporates and all. They won't accept check because in those days people used to give check without any cash. Even today many people are issuing. So many corporates and government will not accept checks. They will say you give demand draft. So they will come to the bank and they will purchase a demand draft and send it to the government department. Now, if on the way they send it by post, by courier, the demand draft is lost. No trace of demand draft is there. A has purchased a demand draft for 25,000 rupees in favor of a public works department of Maharashtra. Then he sent it, on the way it is lost. Now what he will do? He has to come to the bank. But the bank cannot issue a duplicate, because if you issue the duplicate, the original can someday be encashed. And the duplicate also will be encashed. I have seen cases where both original and duplicates are encashed. Because in those days were manual days. So you cannot put lot of checks and balances ensuring 100% no duplicate will be encashed. Therefore there is a possibility sometimes duplicate also, both original will be encashed on a particular day, after the 2 months duplicate also will be encashed. So this we will find out only after the time of reconciliation after 6 months. Then you go to the fellow who purchased the demand draft, he will not be available, he will simply escape. Because in no way he is now involved. So to avoid all these things, a bank will not easily issue a duplicate demand draft. They will ask the customer to first, before giving, when he asks for a duplicate demand draft, the bank will ask him to issue an indemnity bond. It is not a guarantee. Why? Indemnity means, the difference between guarantee and indemnity is, guarantee is for a fixed amount, whereas indemnity is for the entire loss caused by a particular transaction. Suppose I say, I guarantee payment of 20 lakhs to you. Then my liability is restricted to 20 lakhs. On the other hand, I say, I indemnify you against any loss that may be caused because you are buying my cement. Something like that I agree. Then you buy cement only for 20 lakhs. The loss is not limited to 20 lakhs. The loss is unlimited. Because suppose I by building a building using this cement, after building 10 floors the building falls. Then I have purchased this cement from you only 20 lakhs. But you should indemnify me for the entire loss. So that is the difference between indemnity and guarantee. So a banker will ask an indemnity bond to be signed by the customer who purchased the demand draft in the first place. Only after getting an indemnity bond, the bank will issue duplicate demand draft after ensuring that the original is not encashed. So the answer to this question is 3, indemnity bond. This indemnity bond will help the bank if by any mistake there is a double payment of the same DD. In which case you can rely on the indemnity bond and collect the money from the customer. The next question is, the relationship between the hirer of a locker and the banker is that of what? The relationship between, banker, there is a difference between safe custody and safe deposit vault, safe deposit locker. Safe custody is where a banker physically receives the goods himself, the packet said to contain the goods. Suppose you have some valuable, a very important home document, house document, anything, any valuable. So you will put it in a sealed cover and go to your bank and say, sir, please accept it for safe custody. Bank will accept it for safe custody and give you a receipt said to contain. The receipt will say, Mr. Ashok Chabra has deposited a sealed packet said to contain the housing loan original, his house's original documents. And the bank will sign the receipt and hand it over, the safe custody receipt, to Mr. Ashok Chabra. And Ashok Chabra has to keep this very carefully. And after 2 years or 3 years, when he wants the document back, he will come to the bank, produce the original safe custody receipt. The bank will receive the original safe custody receipt, hand over the sealed cover to him so that he can make use of the document. This is safe custody receipt. Very clear. Please read the name very carefully. Safe custody receipt. A receipt is issued by the bank. It is given for safe custody to the bank. The bank accepts it for safe custody. This is safe custody. On the other hand, safe deposit locker. This business of safe custody is dwindling over the years. It has almost become non-existing. No bank is accepting safe custody today. If you go and ask a bank, please accept safe custody, no, we don't accept, because it's a very onerous responsibility on the part of the bank. Now, some people give articles for safe custody, they don't come up, they don't turn up. What do you do with the articles? Year after year, the banker has to account for it and keep it, and nobody is there to pay. Sometimes the fellow who gave for safe custody dies, and he changes his address. We don't know where he is. What to do with the safe custody article? Bank is bank can do nothing. If you cannot trace the fellow who gave you the article in the first place, the bank has to still keep it safe. Now you will be surprised to know, State Bank of India head office in Bombay is still holding one John. Some John had deposited 2 boxes in 1912 or something like that for safe custody. It was received by State Bank of India. Now nobody knows where is that John. We have got independence. Now another 60 years have gone. Still State Bank of India is keeping those 2 boxes, not knowing what to do. So this safe custody is a very onerous and dangerous responsibility on the bank. Therefore, the banks have almost stopped accepting safe custody. Only very rare cases, like university giving examination paper for safe custody overnight. In those cases, to help the customer and in public interest, the bank is accepting those responsibilities. Otherwise, from individuals, banks normally 99.9% won't accept anything for safe custody in today. On the other hand, what is safe deposit locker? This a bank is doing every day. What is safe custody, safe deposit locker? Bank has installed locker in its safe room. The lockers are 12 inch by 8 inch, 4 inch, various things, and it is 2 feet deep. Now what the bank is doing is, the bank is hiring the space of 8 inches by 4 inches into 2 feet. That space is hired to the customer. So the customer can keep whatever he wants. The bank is not a party to what he wants. Actually, if you see the operation, the bank will first, there are 2 keys are required to open a safe deposit locker. First is with the manager key and the other is the customer key. The first key, the officer will come, insert and then open. And the second key, the customer has to insert and open. Before the safe deposit locker is opened, the officer will leave. He will not be a party to what you keep, what you take. It is your responsibility, because we have only hired the space. The bank is not in any way responsible for what is inside. So, in the case of a safe deposit locker, the relationship between a banker, a hirer and a banker is that of lessee and lessor. Bank is a lessor because it has leased that space to the customer who is the lessee. So the correct answer to the question is lessee and lessor. The relationship between a hirer of a locker and the banker is that of lessee and lessor. As a locker is given on lease or hire to a customer, banker becomes a lessor and customer the lessee. The next question is, banker is presented 3 checks drawn on an account for different amounts. How the bank will make payment of the checks? Suppose 3 checks come simultaneously. They are coming in, one person is presenting now, another two checks are presented by another fellow. So which check bank will give priority? Is there any order of priority? Is it according to the serial number of the check? The options given are according to the serial number of the check, according to the amount of the check, in chronological order of receipt, according to the bank manager's decision. The correct answer is according to the chronological order of receipt. First check comes, the bank will pay. First check, first out. First in, first out. Second in, second out. Third in, third out. Like that the bank will be doing it. It is not based on the amount. It is not based on any discretion on the part of the bank manager. It is not based on the check number. It is first come, first out. That is the basis on which banks will be paying if a series of checks are given to the bank for payment. Payment of the checks will be made as first come, first served basis.